Well, good morning, everyone. Thomas Montgomery here at Smart Money Alliance and IIMFL. We are having our daily Zoom training and support webinar. We hold this most Mondays through Fridays at 8 o'clock Central. We'll typically start about a minute before the top of the hour, as we're doing now. So this is a time and a place that we get together with our current financial literacy educators and prospective educators. I'd like to welcome Mr. Steen, Brian Steen, on the call today. And so this is where we talk shop, what's working, what's not, what advancements do we have, success stories, and so forth. Yesterday, we rolled out this new $100,000 business line of credit. And I think it was a really good session. The feedback that we had was very positive. And so today we're going to do an abbreviated lesson. We have a media interview that I have to leave for early. We're getting a lot of momentum with this $100,000 business line of credit. And so I have to be at an interview at 8:40 this morning where they're going to help us get the word out. But specifically, we're going to orient today's brief discussion in how it can help you as a current or prospective financial literacy educator. While it's true, this line of credit is available to any industry, any type of business, your clients as well as yourself. We're going to look at it from what's in it for you perspective today. So we'll start by recapping what we covered yesterday for those of you that might have missed it and or that just need a refresher. And then we're going to go through some simple action steps, because that's what we learn, what we know through life experiences. If we don't take action, there's probably not going to be any change in outcome. All right, so we're going to talk about providing financial literacy educators a business line of credit up to $100,000. Recap. So yesterday we introduced this. I provided you here the YouTube link, which should have been emailed to you, but also we put that recording, that YouTube, actually up on the career page, so it's real simple for you to go to. There are, I think, 5 YouTube videos on the career page that I would urgently request that you view and be familiar with. So regardless if you're currently working with us as a financial literacy educator or considering becoming one, that's probably the most important training. And if you talk to Jennifer, our education coordinator, who's here to support you and assist you in being successful, that's probably the first thing she's going to ask you or encourage you to do is make sure you've started at least watching those 5 YouTube videos that are past training sessions that are absolutely the most relevant. All right, so the highlights of the $100,000 business line of credit. Number 1, it is not based upon credit worthiness and it's not based upon collateral. We had a really good discussion yesterday about the 3 C's. I'd like to go ahead and ask each of you to remind me and confirm what are the 3 C's of lending. So go ahead and go over to the Q&A box here in Zoom and tell me, please type in what the 3 C's of lending are. We covered it yesterday. If you don't remember, it's okay. Go ahead and put in don't know. But we need you to respond. So everyone, please. Angela, April, Brian, Christopher, Claudia, Kwong, Diamond, Doug, Jackie, James, Jennifer, Joseph, LJ, Monique, Natalie, Odell, Peggy, Peter, Regina, Robert, Rudy, Sonia, Teresa, Uchenna, Vincent, Will, Yvette, and others. So let's go ahead and let's just confirm understanding of the 3 C's. That's important both for our discussion, but if you're a financial literacy educator and you're teaching our entrepreneurship program, the 4th lesson is over banking and money. So even though we're providing you the PowerPoint, the speaker's notes, and the handouts, certainly you're going to want to absolutely ensure that all of your students understand the 3 C's of lending. Once they do, then we can be successful. Some people don't understand the 3 C's, so they're looking for money to start or grow a business, but it's inconsistent with their current reality. All right, so thank you for putting that in there. So what are the 3 C's? Credit worthiness, collateral, and then what's the third? Cash flow. So in general, if we have at least one of the 3 C's, we can get funding for our business, pre-launch, startup, or existing. So if we have credit worthiness, or we have collateral, or we have cash flow. Of course, pre-launch wouldn't have cash flow, I understand. If we have none of the 3 C's, we're in a very difficult circumstance, right? So normally there's not funding available on a debt base, on a loan basis without any of the 3 C's. So that's where we would look more closely at an equity-based capital raise, which we frequently do, right? Because we've covered there's 3 ways you can get capital to start or grow a business, and only 3 in general. Number 1, debt-based, money that we borrow, we promise to pay back. Number 2 would be equity-based, money that's injected into our business out of our pocket or someone else's, not with the expectation of a loan repayment, but with the anticipation of sharing in the rewards of the growth and the profitability of the business. And the third is earned income. Those are the 3 ways. All right. So if this business line of credit is not predicated off of credit nor collateral, what must it be based off of? There's only one of the 3 C's left, right? Cash flow. Now, at first glance, you'd say, well, that's a deal breaker. I don't have the cash flow, or my clients don't have the cash flow. But remember, these variables can change. If we don't have credit worthiness right now, we can work on our credit and rapidly change it. If we don't have cash flow right now, we can work on that variable and rapidly change it. Not so much on collateral. Usually you can't just invent collateral. Normally you would need cash flow to be able to buy collateral. So, avoid the temptation to fall into the mindset of things that are too good to be true. We need to have at least one of the 3 C's. Now, if we go to a traditional bank, it's not unusual for them to look for all 3 C's, isn't it? But there's many different sources of capital. Each have different underwriting criteria, and we need to have at least one of the C's. So we're not here to say this is the only type of capital available in general or for our financial literacy educators. That's not what we're saying, but it is one of the very attractive types. And since it's not based upon credit and it's not based upon collateral, every one of you can qualify for this if you follow the simple steps. All right, second sub-bullet, and this is just a restatement of what we covered yesterday. It's unrestricted use. Some sources of capital restrict what you can use it for, or what you can't use it for. In this case, there are no restrictions. This is true business credit. Now, in our vernacular, when we talk about true business credit, we're talking about it reports under the EIN of the business. It reports on your business credit report. It does not report on your personal credit. Your personal credit is not a prerequisite for being approved. So it's business credit. So it's providing both funding and a significant boost to your business credit profile. There's no minimum time in business. Many sources of capital, certainly not all, but many sources of capital like to see a business around for a while to have a higher degree of confidence that it will sustain itself. Just so you know, typically any business less than 2 years old is usually considered a startup. But in this case, we do not need to be in business 1 year or 2 years for the business line of credit. And then the amount is up to 100,000. Several of you came back yesterday and said, this isn't going to work. I need $500,000. I need $1 million. I need multiple millions. Well, this is not the right source of capital if you need more than 100,000. Now, this could be the first 100,000, or it could be part of the 100,000, but this is the cap. This is not something that we can negotiate and make changes to. I'm giving you the brief on the skinny on how it works, and the cap is 100,000. If that's not worth your time, I respect that. If you have clients that 100,000 wouldn't help them, then this is not the right source of capital. This is not all that we do, right? We are technical advisors. We're a nonprofit organization committed to narrowing the racial wealth gap by teaching financial literacy, improving credit, and facilitating the development of minority-owned small businesses. We're not a lender. We're not a one-trick pony. This is just one type of capital, but a very attractive one. Okay, so let me check notes here and see if any of you have questions so far. You all inundated me with your responses to the question, which I appreciate on the 3 C's. I think we all knocked it out. Let's see if anyone has any questions so far. Otherwise, we will move forward. Okay, we do have a question, and Brian asked it. Collateral for a business, and that's a good point. Depending upon the lender and the source of capital, there can be different types of collateral. So we do a lot in the real estate space, where we're not mortgage lenders, but in terms of helping entrepreneurs get capital for either fix and flips or buy and hold. Well, in that example, the real estate is commonly the collateral, isn't it? And so that works for SBA 504 loans, as well as the private equity deals that we do in the real estate space. Collateral from an individual level, which I think is more what Brian's asking about, is often what you're bringing to the table that can be pledged in case that your business doesn't service the debt. And again, there's no collateral needed here, no collateral, but he's just asking what type of collateral in general. So specifically, types of collateral often would be, well, how much cash do you have in the bank? So that shows both liquidity and cash on hand. It could be your retirement account. It could be inventory. It could be accounts receivable and so forth. But if you go look at your balance sheet of your business, Brian, or your clients, often collateral will be on the asset section of your balance sheet. All right, so let's move on down now, and we're going to drill into the specific process. And I apologize, we'll have to end a little bit early because I have the media interview I need to run to. So let's go ahead and pull this up. What is the process to access the $100,000 business line of credit? I'm addressing this from the perspective that you're a financial literacy educator. When you're thinking about your clients, obviously it'd be a little bit different, but this is from our relationship, your role. Number one, we need to determine how large of a business credit line you want. You could pick anything, let's just say from 10,000 to 100,000. And so that's where we start. How big of a credit line do you want to have? The second step is real simple. We need to go ahead and divide that amount by 10,000. And you'll see, and we've talked about, you're going to generate on average $10,000 up front for each class that you teach. And the math on that is there's a rounding error, but $396 per participant in the entrepreneurship program. So let's go ahead and put into our calculators, $396. And on average, we will have 25 participants. So technically that's $9,900, not $10,000, but let's ignore that and make it a rounding error. So we know that you should generate gross income $10,000 per workshop taught. There's 4 lessons that you teach in the entrepreneurship program. You can see that on the IIMFL. Therefore, we need to figure out how many workshops you need to teach to create the cash flow to be able to document to qualify for the line of credit. Because remember, we're saying this source of capital isn't based upon credit, is it? It's not based upon collateral, and there's only 3 C's, so we're down to cash flow. So what we're going to be able to do is jack up your cash flow, at least for the interim. If you don't want to keep teaching after 3 months, that's fine, but we'll jack up your cash flow, which is good in its general regards, but then we're going to meet the underwriting criteria for the business line of credit in 90 days. All right, so back to this. So we need to determine how much you want. Number one, divide that by 10,000. That's going to tell us how many workshops you need to teach. We need to go ahead and build out your loan package, just like our clients do. So you would enroll in the entrepreneurship program yourself. Yes, you can earn a commission off enrolling yourself. We'll build out the loan package so we have both an understanding of the client experience, but also your position for funding. Then you need to get with Jennifer, and she's going to assist you in getting your workshop set up. How many workshops? Well, you determined how much of a business credit line you wanted. Let's just say it was 100,000, the max. And then we divided that by 10,000, so that equals 10. It doesn't have to be that, but let's just go with that for example. So then Jennifer is going to help you set up 10 workshops in that start in the month of August. Now, the workshops we know are 4 weekly sessions. They can be online or in person. And so some of these workshops may not be finished in the month of August. They may spill over into the month of September, but that's okay. We need to be starting, in that example, 10 workshops a month. If that's too much for you, that's okay. That's pretty much what we'd consider a full-time course load. I was a college professor. That's about the equivalent of what a professor's full-time course load is. If that's too much, be a part-time educator. That's fine. So regardless, 1, 2, 3, 4. And then now we get into number 5. So we've got the workshop set up. Of course, we're providing you PowerPoint, speaker notes, handouts. You're golden. Now we just need the butts in the seats, don't we? Well, we've talked about there's a couple different ways. The preferred way to put butts in the seats is to work with collaborative partners, reaching out to churches, chambers, co-working spaces. We went through a list of top 10 collaborative partners that you should be reaching out to. Here's the YouTube video, and it's also parked on the career tab, so it's super simple for you to go back. Separate and above from collaborative partners, you can promote the workshops as you would like to. Now, I know Monique was asking, a couple of you were asking recently, what's the minimum and maximum per class? That's up to you. You can determine the minimum. The goal is to be at 25 on average, and you won't be at 25 every class, right? Some workshops you'll have more, some you'll have less, but ultimately you set the minimum and the maximum. Going above 100 in a given class is going to be an exhausting effort. It's a lot of fun, and it's very profitable. So my advice, I wouldn't go above 100, and then the minimum is what you want. I think consistently starting a new workshop every week is key. So 1 week you may have 35, and the next week you may have 7. I'd treat those 7 people like royalty. They're just as important as the 35. Just, start setting up the workshops with Jennifer. Start a new one every week. Some classes will be larger than others. It's okay. It's okay. All right, and so then number 6 is we need to teach the workshop for 3 months. Well, why? Well, we've discussed that this source of capital is not based upon credit. It is not based upon collateral. We only have 1 C left, which we've all covered, which is cash flow, isn't it? Therefore, what we want to do is demonstrate 3 months of cash flow. I was talking to Will this morning, and he asked, well, does it have to be the same amount of cash flow every month? No, of course, and there's going to be some ebb and flow. But if you're teaching, in this example, if our goal was to max this out and get a $100,000 line of credit, which is real, it's valid, it's credible, it's the real deal, then we would need to teach on average 10 workshops a month. And that's a pretty aggressive pace. That's what we'd call full-time. You may not want to be full-time. You may have other sources of income that could contribute to demonstrating this cash flow. Because again, it's a 1-to-1 ratio that we talked about, right? If you want, in this model, we're not talking about all models of accessing capital, but for this product, if you want a $100,000 business line of credit, they extend it to you on a 1-to-1 ratio. So if we've demonstrated that we're averaging $100,000 of receipts per month, which we'll do by teaching 10 classes statistically, then you'll qualify for a $100,000 business line of credit. Some of you, I felt yesterday, got a little unnerved. It's okay. A lot of us have spent our lives working W-2 jobs. And, to earn $100,000 in a month seems like pie in the sky. It's not at all for entrepreneurs. There's many small businesses that generate over $1 million of gross income. We're not talking about net income. We're not talking about profitability. That number is going to be smaller, of course. But for your small business, your financial literacy educator business, to generate $100,000 of gross income per month is not extreme. It's not an exaggeration. It's not a stretch at all. It's very doable by following this model. Now, keep in mind that 100,000 of gross income does not include the back end income by helping people write the indexed universal life policies, what we call the smart money plans. That's above and beyond it. But Nationwide, who we use for the smart money plans, are not going to pay you via credit card transaction. And this model specifically, not all, but this model is predicated off based upon credit card receipts and a dollar for dollar match, not a merchant cash advance. So with that being said, the credit card receipts is viewed both as the demonstrated cash flow, and the truth is it also serves as the collateral. You've created your own collateral through your cash flow. So in month one, you'll generate upfront income, predictably, of $10,000 per workshop. And this, again, is gross income. Some of you maybe aren't familiar with the difference between gross and net income. And if you go through the entrepreneurship program, you'll learn about those key concepts. This is not saying this is your profit. That's unrealistic. I don't know that there's any business that your gross income equals your net income. There's always going to be a cost of services sold or cost of goods sold, called COGS, or costs in accounting terms. So month one, you're going to make 10 grand per workshop taught. You're picking the number of workshops. Same for month two, no difference. Same for month three. And then month four, we can apply for the line of credit because we have 3 months of cash flow with documentation to qualify. Now, I realize a lot of your clients aren't going to want to go out and teach these workshops. So they would need to come up with other ways to demonstrate the required earned income to qualify for this line of credit, or simply we use a different source of capital. That's what's key. More important than anything, there are different sources of capital based upon different circumstances. One size doesn't fit all. All right, so let's take a couple minutes to work through your questions, and then I need to run to this media interview. So we covered Brian's question about collateral. Regina got the 3 C's right. Joseph, we covered yesterday the interest rates on the line of credit. It's very reasonable. And as far as commissions, if you enroll clients in the Capital Ready package, then you'll be earning 5% of the capital raise. So Joseph, $100,000 capital raise would put $5,000 in your pocket. Hopefully that answered your question. Kwong asks, how long will it take to complete the business funding in general? Well, there's not a general answer to that. It's going to be based upon the client's circumstances, the type of funding they're going for. It'll vary. Teresa asked, can we use that money to enroll in the entrepreneurship program yourself? Of course, of course. You don't have to be a client to be a financial literacy educator. And so you can just schedule your first class, make your first $10,000. And if you want to then turn around and enroll in the entrepreneurship program yourself, you can, but you certainly don't have to. So again, it's unrestricted use, Teresa, so no worries there. Uchenna asked, do we need to have a specific bank account for financial educator business to show income? I'd recommend that. I would recommend having a separate business account for these transactions, but you don't have to, but it would be recommended. All right, so Jackie asked, if the client already has cash flow 3 months, can they move on to step 2? Absolutely, yeah. You're gonna have some clients that obviously are not financial literacy educators. They're laundromats or dry cleaners or donut shops or whatever else they do. And so if that is the case, then we can plug them in as long as they meet the other criteria. This is not exclusive to financial literacy educators, but it is a golden nugget for those of us that are out teaching. All right, Monique asked about, well, the educational workshop hasn't changed. So let me pause for a second and get over to what Monique is asking about. And we'll share the screen again. So she's asking, you know, the entrepreneurship program is what we're out teaching. It's here on the iimfl.org website. And so from that, you can see what we teach and a description of it. Nothing has changed there. I think what she's tapping into is at the conclusion, you're going to teach, or you're going to have someone teach the 4 topics. And then there's the implementation portion with each. We'll be handling the implementation off of week 1 and week 4. Week 4 is the capital match. And so it may be that we'll recommend this line of credit for clients that qualify or near qualify for it. But you won't have to worry about that from a client perspective. Now, if you wanted to add this a little bit to your marketing pitch, you could, but there's all different types of funding that can come out of the entrepreneurship program. SBA loans, non-SBA loans, lines of credit, and so forth. Kwong's asking, what books do you recommend to help us to have more? I wouldn't worry about books right now. I would just get really intimately familiar, Kwong, with the 4 topics that you're teaching. You know, you're going to be teaching about planning for a business, building business credit, financial management, banking and money. We've provided you the PowerPoints, the instructor guides, and the speaker's notes. You should, I'm sorry, yeah, and participant handouts, I should have said. And then you need to know that, and you need to go teach, Kwong. And so continued learning and reading books is all great, but we need to become a master of this content and go teach and not be distracted. Not to say that you're our Kwong, but we need to get those classes set up. All right, we answered second part of Jackie's question. James is asking about, for the entrepreneurship program, it's $99 a week times 4, of course, is $396. We split that 50-50. So you get half and we get half. And then, yes, then also you're getting paid a lot more than that off the back end, off the key person policies and or IULs in general. Very good. I don't have any visual charts or graphics, Jackie, other than what we just described. Peggy's asking, is the funding vehicle on the site? No, because there's infinite number of different types of funding vehicles available. I'm just simply educating you about one of them, a new one, a new source of capital that's probably most relevant to you, because not you, Peggy, individually, but to you all of us as financial literacy educators, because we don't have to use our credit. We don't have to worry about collateral. We just go out and teach, and by teaching, we qualify for a line of credit using this methodology I just described. Brian asked, he already has the cash flow. He just wants to move forward with the funding. That's fine. Go enroll in the entrepreneurship program. That's how we help clients prepare their loan package and have the necessary knowledge to be successful. So Brian, you can just go to this page and come down here to the bottom and fill it out and click, not on that one, but click on that one, the entrepreneurship program, hit submit, and we'll make it happen. Uchenna asked, would unemployment income count as cash flow? In some circumstances, it wouldn't. I'm sorry, it would, but it would not for this line of credit we're talking about. Robert's asking about a good promotional piece for the 100,000. Well, I guess we could certainly develop it, and that's what I'm being interviewed on here in 13 minutes that I need to be leaving and 3 minutes to go to the interview for. I think there'll be a press release coming out, but again, we're not selling 100,000. We're not selling this line of credit. What we're doing is saying, let's get people involved in an entrepreneurship program, provide them the knowledge and help them apply the knowledge through these steps. And then the end result is the capital match. So this is to them just a potential outcome of that process. So I would resist in going out and pitching a specific funding vehicle. Instead, I just make reference to it, because not everyone qualifies for all types of funding vehicles. And so then they're going to get upset with you if they expected a certain funding vehicle that is not right for their circumstances. Diamond's asking about the classes. Right. So let's just use a simple example, and this is not a good one, but today's August 7th. So let's say that you started your first, and this is answering Diamond's question, you started your first entrepreneurship program workshop, and your first class was today, August 7th, for week 1. Well, that group on August 14th would be on week 2. But next week, not at the same time, same day, then you would start a new group that would start with week 1. And so each week it's recommended that you start a new class, and then they'll cycle through those 4 weeks, and then they'll graduate. Diamond's asking, are they able to receive grants by working with us too? There are some grants that are out there. You know, they fall outside of the normal 3 C's, out of the normal economic model of debt-based, equity-based, or earned income. But you are right, Diamond, there are some grants out there. All right, so I hope that in this condensed session today, we provided additional clarity and guidance of what you should be doing. And it's just real simple. Go teach. If you teach, you're going to help other people. You're going to make a difference in their lives, and you're going to make an adult income. It's really that simple. Go teach. Go teach. Go help others earn great income. All right, thanks, everyone. We'll see you back here Monday morning. Have a good day and a good weekend.